Welcome students to another lecture in the series. We are studying the head income from salary. Let us continue with the perquisites, the additional benefits. Here we are about to study the value of furniture. Furniture provided by the employer to employee for the personal use with or without house accommodation may be owned by the employer or may be hired by the employer for the usage of an employee. So how to compute the taxable value of the furniture? Let us see. If the furniture is owned by the employer, then in that case, the taxable value is 10% of the original cost of the furniture to employer per annum. Okay. If the furniture is hired by the employer, then the taxable value is actual hire charges paid by the employer. Let us have a look to the question. Mr. Yash furnishes the following particulars of his remuneration for the year ending 31st of March 2015. His basic salary is rupees 35,000 per month. Dearness allowance is rupees 12,000 per month, of which 40% forms part of salary. Then city compensation allowance is rupees 8,000 per month. Lunch allowance is rupees 500 per month. Children education allowance is also given to us. That is rupees 250 per month, each for two children. Medical allowance rupees 500 per month. He is provided with the rent-free accommodation in Delhi. The cost of the furniture provided is rupees 1 lakh, and two air conditioners which have been taken on hire by the company have also been provided in the accommodation. The hire charge of each air conditioner is rupees 2,000 per annum. You need to compute the value of rent-free accommodation that is provided by the Reserve Bank of India, and the accommodation has been taken on rent by the RBI at rupees 5,000 per month. Let us see the computation. In this case, what has happened? The perquisite value shall be 15% of the salary or the rent which is paid by RBI, whichever is less. So salary for this purpose, let us compute the salary first of all. We will consider the basic salary for 12 months, that is 35,000 into 12, which will come out as 4,20,000. Then further we will consider the DA, and we will consider the DA that 40% only. Okay, so 12,000 for 12 months, but 40% of that part, so 57,600. Then city compensatory allowance rupees 8,000, medical allowance rupees 500 per month, for 12 months rupees 6,000, education allowance rupees 250 per month for two children for 12 months, so 6,000. We do have an exemption under education allowance that it is allowed up to rupees 100 per children for up to maximum two children. So that 100 rupees exemption is given here. So it would count as 2,400 out of the 6,000. Then we do have lunch allowance rupees 500 per month for 12 months, that is rupees 6,000. Salary for calculating the value of rent-free accommodation here accounts for rupees 5,01,200. Now, if the house accommodation is hired by the employer on rent and it is provided to the employee, then the taxable value is minimum of the two. That is 60,000, which is the actual rent paid by the employer, or 75,150, that is 15% of the salary. So whichever is minimum of these two will be the taxable value. So thus the value of perquisite here shall be rupees 60,000 plus 14,000, that is 10% of this, that 1 lakh plus the 4,000. So that will come out as 74,000. Next is the value of servant if it is provided to the employee in the form of cook, watchman, cleaner, sweeper, gardener, security guard provided by the employer to employee for his own personal use, and is taxable only in the hands of specified employees if the servant is hired by the employer, and is taxable for all categories of employees if it is if the servant is hired by the employee and expenses are paid or reimbursed by the employer later. So taxable value of servant is actually the actual expense which is incurred on servant by the employer. Actual expenses for this purpose include salary, allowances, perquisites, which is paid to the servant by the employer. Then next comes is the value of gas, electricity, water services provided to the employee. And let us see the taxable value of these. When connection is in the name of the employer and is from an outside agency, so it is taxable for specified employees, and the perquisite value will be equal to the expenses which are incurred by the employer. Then second, connection is in the name of the employer and is from their own source or business of the employer. So in that case, the taxable amount would be for specified employees, and the perquisite value will be equal to units consumed at manufacturing cost per unit. Then third case, if the connection is in the name of the employee, then it is taxable for all the employees. So it depends that on whose name the connection is there for these services like gas, electricity, and water services. Then next comes value of telephone or mobile. In that case, they are fully exempted in the hands of the employee, even if it is being installed at the home of the employee. And similar cases for the mobile expenses also, they are exempt from tax. Then next comes value of gift vouchers. Receipt of gift or voucher from the employer in excess of rupees 5,000 is taxable. So up to rupees 5,000 it's free. Beyond 5,000 it is taxable. Then use of movable assets. Value for use of computers and laptops for personal use is fully exempted in the hands of the employees, even if the computer is installed at the home of the employee, just like your telephone. Value for use of movable assets other than computers and laptops is 10% per annum of the actual cost of that asset, or the amount of rent or the actual charge which is paid or payable by the employer, as the case may be. So this value shall be reduced by the amount, if any, which is paid or recovered from the employee for that particular purpose. If employee has paid anything out of his own pocket, then we need to minus that from it. The next comes value of loan to employees. Loan is provided by the employer to employees at a concessional rate or at interest-free rate. This loan is exempted from tax if the loan is up to rupees 20,000, or if it is given for meeting out expenses on medical treatment of a specified disease. In other cases, the taxable amount will be equal to the interest which is calculated on the loan at the rate of interest which is charged per annum by the State Bank of India as on the first day of the relevant previous year in respect of the loans for the same purpose advanced by it, in excess of the rate of interest which is paid by the employee to the by the employer to the employee for the such loan for the particular previous year. Let us have a look to a question. X is a person who is employed at ABC Limited on a monthly salary of rupees 25,000 per month. The company provides him with the following benefits. The company owed accommodation is provided to him in Delhi. Then company has given him a housing loan of rupees 5 lakh as on 1st April 2014, on which the interest charged is at the rate 6% per annum. The entire loan is still outstanding. We need to assume that the interest charged by SBI is 10% per annum. The company gave him a gift worth rupees 15,900 on his anniversary as on 21st of October 2014. He is allowed to use the video camera belonging to the company. The company had purchased this camera for rupees 60,000 on being used by X. The company pays the telephone bills of rupees 22,000 for the telephone which is installed at the residence of Mr. X. Then further, there is a domestic servant which is being provided at the residence of Mr. X. Salary of that servant is rupees 1,200 per month. The servant was engaged by him and the salary is reimbursed by the company. So we need to compute the gross income from salary of Mr. X for the assessment year 2015-16. So for that purpose, we'll consider the basic salary first of all. That would count as 25,000 rupees per month for 12 months, so accounts for rupees 3 lakh. Then value of accommodation, that is 15% of the salary, so 45,000, 15% of 3 lakh basically. Value of housing loan, that is 4% of this 5 lakh, that is rupees 20,000. Gift in kind is given as 15,900, but up to rupees 5,000 it is exempted, so we will charge at 10,900. Then value of the use of video cameras for 4 months, so 10% of the value for 4 months out of 12 at for rupees 60,000, that would come out as rupees 2,000. Then servant facility, that is 1,200 rupees per month for 12 months, so 14,400. The telephone facility is exempted from tax, so nil, and we can obtain the gross salary from all these calculations as rupees 3,92,300. These are actually mandatory to show. You must show all the working notes that you must have used during the question. Valuation of housing loan is taken at 6% minus 10% minus 6% of the loan amount. Gift in excess of rupees 5,000 is taxable. Up to rupees 5,000 it is exempted from tax, I told. Expenses, telephone expenses are fully exempted, and the expenses of servants are fully taxable. Then next comes the value of club membership. If the club membership is for official use, then it is not taxable. But if it is for personal use, then the amount of expenses paid or reimbursed by the employer is fully taxable. Thank you. If you have any questions related to these concepts of perquisites, you may write to me.